This space is a $2.5 trillion space today. By the end of this cycle, it should be $10 to $15 trillion. By 2032, if you continue growing at these kind of rates, you get to $100 trillion. So there's $97.5 trillion of money on the table, which is why I keep telling people not to fuck this up, because the opportunity is so big. And that is just by owning the new internet, essentially.
Is crypto dead? Will crypto pump? In 2024, Bitcoin got its long-awaited Spot Bitcoin ETF, and markets also witnessed the halving event, and Ethereum seemingly landed Spot ETF approval. Bitcoin continues to hold the spotlight, especially following the recent market consolidations. Founder and CEO of Real Vision and global macro investor RaoulPal sheds insights into the banana zone and his everything code framework, which provides a comprehensive understanding of how global liquidity cycles drive asset prices, particularly in the tech and crypto sectors. Signs of slowing job growth and easing wage pressures suggest potential Federal Reserve rate cuts, leading investors to consider Bitcoin as a hedge against economic uncertainty. According to data from Farside, a United Kingdom-based investment firm, US Spot Bitcoin ETF, recorded an inflow of about $900 million on June 4th alone. The total market capitalization of all cryptocurrencies rose to $2.8 trillion after the market added $80 billion in just one day. Bitcoin leads the way with a market cap of $1.4 trillion, placing it in the 9th position on the list of the top 10 most valuable assets in the world. PAL sees this as a democratic way of distributing wealth, noting that the current crypto market could grow to $10 trillion to $15 trillion by the end of this cycle, and potentially reach $100 trillion by 2032 if growth rates continue. Furthermore, RaoulPal's Bitcoin prediction stated, "The cycle gives you a peak of $400,000 in Bitcoin." He suggests this peak could occur around June 2025, aligned with the broader liquidity cycle. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
The banana zone is that period in crypto markets which you would call altcoin season. It's when everything just starts going vertical. Now, it always comes in the US election year because of this cycle, which is the Bitcoin halving cycle, which is this everything code cycle. And it tends to come around the summer or autumn of that year, and things start accelerating and get silly. And when prices start going bananas, and they look like the banana. So there's some charts that I've shown on Twitter where, you can see the banana zone there on the left side of the chart. The prior banana zone is when suddenly you get consolidation, it goes up a bit, consolidates, and then it just goes bananas. It's been repeating every single time since crypto began. So this is the Bitcoin halving cycle. It's that chart. That chart is the chart. That's why it looks like a banana. It's just like, it just does this. And it's why we're all in crypto, to be honest.
So we're all in. So hold on. Are you telling me you're not in this for the tech? Are you telling me that you're in this for the bananas?
I'm in it for the bananas. No, the bananas that are a function of the tech.
Okay.
In the end, the more people build on it, the more. If you abstract this all away, what are we doing here? We've been given the new layer to the internet, which is the internet of value, the layer of ownership, settlement, all of this stuff. Now, unlike the internet, we couldn't own that. We can own this. So the more it gets used, the more the number go up and the more we profit from it. So it's this huge egalitarian democratic way of distributing a huge amount of wealth to a huge number of people. To put it in perspective, this space is a $2.5 trillion space today. By the end of this cycle, it should be $10 to $15 trillion. By 2032, if you continue growing at these kind of rates, you get to $100 trillion. So there's $97.5 trillion of money on the table, which is why I keep telling people not to fuck this up, because the opportunity is so big. And that is just by owning the new internet, essentially. So that's what this is all about. So there is a banana zone, which is the periods of time where it goes bananas. Then we get the corrective periods, and then we repeat this cycle again. Now, will everything repeat perfectly? Will it be identical? No. There's no guarantees come with this. But It's based on the liquidity cycle. It's based on the macro cycle. It's based on interest rates. It's based on a lot of things. If you think of what liquidity is doing, why the central banks and governments are injecting liquidity, it's to be able to fund the debts. We're in the big debt funding cycle this year, which is why the banana zone happens and why the everything code cycle, all of this happens. They have to fund all the debt. And so they inject liquidity into the system. They do it via rate cuts. They do it via the reverse repo. They do it via quantitative easing. They do it by any mechanism they can to roll the debt. And that's Europe, the US, China, Japan, the UK, everybody, right? So they're all teeing up. They've been waiting for inflation to come lower, ready to start hitting the accelerator. Liquidity has been rising, which is why the markets have been rising. But it gets to the phase where it has to go up a lot to finance, $10 trillion of stuff that needs to be financed. So that's all to come. And that tends to happen this year and next year.
The banana zone is a phase in the crypto market characterized by rapid and significant price increases. Pal highlights that this phenomenon usually occurs around the summer or autumn of U.S. election years, driven by the Bitcoin halving cycle. Ethereum, the second largest cryptocurrency, has been a stagnant spectator in the recent crypto rally, stuck between $3,841 and $3,703 for 2 weeks. Even the long-awaited Ethereum ETF approval failed to spark a move. Is Ethereum destined for irrelevance, or is a breakout brewing just beneath the surface? The demand for spot Ether exchange-traded funds will be a lot lower than for their Bitcoin equivalents for a number of reasons, JP Morgan said in a research report on Thursday. Pal mentions that in 2020, Ethereum began to outperform from the summer onwards and entered a full banana zone by 2021. He anticipates a similar pattern will occur, with Ethereum starting to gain momentum this year and accelerating next year. Now, let's redirect our attention to a video.
So how do you see the ETH BTC chart playing out?
Well, I think it goes to new all-time highs.
Wow, okay, that's big.
Yeah, it's a big move. That's what I think happened. That's what I think is up for grabs here. I've been following this chart for a long time. It has been, we now come into the season where this tends to outperform. It's usually when the ISM is picking up, the altcoin season starts, the liquidity season starts. The banana zone tends to be the period when ETH outperforms. So we're in that zone. It really picks up next year, but starts this year. If you go back to 2020, ETH started basing and then started outperforming from about the summer onwards and really started picking up towards the end of 2020. And then by 2021, it went ETH-tastic. It went into full banana zone. I think we'll see something similar. I also think ETH will underperform Sol. People get confused when you show them
I want to go there.
What? You don't like Sol anymore. It's like, no, I think Sol outperforms this. But I think ETH outperforms Bitcoin, and I think it's healthy for the space because it shows a deepening and broadening of the overall space, which is what we want. Yeah, if the ETF just gives them the cover to use ETH as their foundational layer for the stuff that they want to do. Because Goldman Sachs is not going to be using the ETH ETF. It wants to use ETH, as does JP Morgan's everybody else, to tokenize assets and do other stuff. What is super interesting to Wall Street is yield. Yield allows you to build products. You can do all sorts of things with yield. You can take the ETH yield and buy call options to give you upside or guaranteed products. You can create structured products. You can do lots of things. So I think that they've always been interested in ETH, and I've said this for a long time, is the ETH yield is the big game in town. Not because it's high yield, but you can do lots of financial engineering once you've got yield. They also all want to build on the technology, whether it's on a layer 2 or on ETH itself. But this is where they're going to start tokenizing a lot of assets. Nobody gets fired for using Ethereum. So,
Yes.
That's a choice. And most of these people have been building, most of the banks have been building in this space and had teams since 2015, 16, 17. So if you think of the technology they've been using, it's generally ETH. So they understand ETH. ETH is the big one. You don't get fired for it. Your board's not going to tell you off. Why did you use some random thing? But we've now got the flexibility of the layer 2s, which makes it cheaper and easier, depending what level of security they need. So look, I think it's a very, very big deal for the financial markets. Much bigger than it is for retail.
Slightly over 15 years since its introduction into the finance world, cryptocurrencies have now become mainstream. With Bitcoin leading the charge, the crypto market is growing in several developed countries, including the U.S. Present data shows that the U.S. crypto market will be valued at $32.9 billion by 2028. This would be an annual growth of 9.10% over the next 4 years. That's not all. As user penetration at the best crypto casino sites is expected to hit 29.12%, as more and more users are beginning to see the benefits of using these sites over standard online casinos. What is your stance? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.